The conversation about the national cake on a day when the Finance Minister Matia Kasaija presented the amended national budget. Many have been reflecting on what the budget means, and the common man of particular interest is the private sector battling with the high operational costs powered by high fuel prices. To help us appreciate how the private sector will cope over the next financial year, we have Finance Kisirinya, the Chief Membership Officer at the Private Sector Foundation of Uganda. Welcome, Mr. Kisirinya. And from what you look at this, what does this budget mean, especially when it gets to the ordinary Ugandan? What does it address? Should we be worried?
Thank you very much, Mr. Chamagero, and our viewers tonight. The budget that has been read tonight is a mixed bag from our perspective as the Private Sector Foundation. One, the budget was constructed to help the businesses recover from the effects of COVID, dealing with issues of reducing aggregate demand, dealing with issues of reducing cash flows, but also dealing with the issues of capital that was lost during the lockdowns in COVID. It did not, though, respond to the current challenges of increased prices. Now, the business people have got to find mechanisms of surviving and growing out of this.
Francis, Ugandans expected that maybe in this financial year budget there would be tax incentives from the government, given the fact that the prices of commodities have gone up. Did you expect the same? And since you've not been given the tax incentives, what should be the way out?
Yeah, clearly every business person, wherever they are, they thought that government would come in and make some reliefs. Obviously, things are going up. We know very well that stop. Prices are going up by, on average, about 6.3%. And very soon, even cost of money will go up by probably 1%. So these things are increasing. And the causes of these increases, yes, we know they are external, but we are operating in our domestic market. Now, if we don't do anything to support the companies to be able to overcome the challenges of increases in the prices, then they might take very long to come out of the COVID challenges. Already we know, for instance, that there are companies that are struggling to repay their loans, and about 2 trillion shillings worth of loans are at risk of becoming bad. Now, we expected some reliefs from government, for instance, by looking at some taxes, for instance, of crude palm oil, reducing it, because they introduced it last year.
The 10%.
The 10%. Things got turned around, and the business community was thinking perhaps this could be revised so that it can help with the cost of increased business, cost of increased doing business for the oil sector, which created increases in cost of soap and also edible oils.
But the president has been emphasizing local production of the raw materials for oil and soap. Do you think in this financial year budget there has been enough allocation to promote local production of such raw materials?
Yes. Certainly, the president is spot on. And we definitely have to build our own capacity to have enough oil from our own plants. That is palm oil, sunflower. And good allocations have been made to support this. But let me tell you, Mr. We import about 90% of what we need in this sector. I'm not sure whether we can do this in the next 2 weeks.
So you mean we don't have the capacity yet?
It will come with time, but not in the next 3 months.
Okay, there has been money put in several ventures. We have money in the parish development model. We have money in UDB. We have money put almost in other sectors. Will this money boost the economy?
Definitely.
Or is this money accessible?
Definitely to boost the economy. And all of those things were designed to lift the economy out of the slump of COVID. For instance, parish development bond is bringing money, is bringing people.
1 trillion.
Yes, people who never earned anything before to start earning, and when they earn, they consume, meaning that we'll recover our consumption, and then businesses will start growing again. That is quite helpful. We are seeing money that is coming to recapitalize businesses through UDB, through the Small Business Recovery Fund, through the Women Fund. All of this is going to help companies recover from the challenges of COVID.
Okay, despite you as a businessman crying of the tough economic times, URA is anticipating to collect more revenue in the next financial year, given the fact that in the previous 3 financial years, it has been registering revenue shortfalls. How is the equation working out for you?
Yeah, certainly there's been revenue shortfalls, not because URA is not doing a good job, but it is because of the ambition. We give them very huge targets, certainly, in an economy
30 trillion, I think, is projected for domestic revenue.
About 23 trillion or something like that.
Yeah.
I believe they'll collect it. But this means that the business people must be ready for this. We thank government, it has not introduced new taxes in this, and very minimal increments, but it is going to do better administration. So the business people, some of you might think that taxes have been increased or introduced, because now URA is going to focus on compliance. So they are going to make sure that you use those electronic fiscal receipting devices, those machines which you call stamping machines. They are going to make sure whatever sale you make is typed through that machine, and when it does, URA registers that particular sale. So you must make a very good disclosure. And I must tell you, my fellow colleagues, the business people, make sure that you read the invoices correctly and don't confuse and make a mistake. If you report an invoice of 7 million, if you saw 7 as 1, you report an invoice of 7 million as 1 million to URA, you're going to be penalized.
Okay.
And that might create a big problem to your business.
Maybe lastly from me, looking at the national debt that stands at 73 trillion shillings, part of this is local debt, domestic debt. Is it time for government to pay the local maybe suppliers, the contractors, for money to come in the economy? Is it the right time for government to pay?
They definitely should have done that a long time ago. Whatever areas that government has not been paying, it should pay. We are happy with the allocations made this year to ensure that arrears are actually paid. When you pay arrears, you unlock money for the business people so that it now gets back to be utilized. We're happy about that. But also the borrowing that government is going to be doing this year, certainly to finance our budget, it has reduced a bit, but it is still high. And our worry as the business community that they're a big borrower. When they go to the commercial banks, which commercial bank is going to look at a common, ordinary businessman to lend them? If they're going to lend them, it is likely to be at a higher price. That is our worry.
Maybe the very last one from me. We are seeing more money towards recurrent expenditure and less towards development expenditure. Is this a disadvantage to our economy? Is it poor budgeting, or the demands for public administration are way much higher than the demands for development?
Let me tell you, viewers, we have to work and rebalance our economy. Let me tell you, we've been analyzing our budgets from 2019. Every year budgets increase. Increase.
Yes.
You increase.
Now we've risen from 44.3 trillion to 48.1 trillion.
And we are investing in our economy. But I'm telling you, we are not getting commensurate returns in terms of GDP growth. It is actually going down. If you look at the trend, it is going down, which means that the allocation of this money has a problem. Perhaps the problem is around how much do we put in development and how much do we put in recurrent expenditure. That has to be looked at if you're going to have a budget that finances development of this country.
Finally, Mr. Kisirinya, as you're winding up this conversation, we understand government is going to do domestic borrowing. What are the tides for the local businessmen competing with government when they're borrowing from the same lenders?
Certainly, it is going to be tough for them. First of all, because government is coming to borrow, and they are coming to borrow a lot of money, certainly the interest rates are going to be high.
Okay.
So government will pay higher interest rates too. But if government pays 1 shilling more in interest rates, then the business people will pay even much more. So the business people certainly are going to access that money, but it's going to be at a higher interest rate. And when that happens, of course, it is going to affect the way the businesses recover. And we are advising our business people, please, if you are to borrow, look at the concessional money that has come in UDB, that has come in Small Business Recovery Fund, that is coming in other funds that the government has set up. If you can't, that's when you now can go.
You compete with the government.
Bank. But make sure you negotiate properly with the commercial banks.
Well, there we have, that is Francis Kisirinya, the Chief Membership Officer at the Private Sector Foundation, with Habit Ziwa, who covered the budget allocations from the time it started to this very day. Thank you so much, gentlemen.